When you set up a Dubai trust or a foundation, one of the first big questions is that can you open a proper offshore bank account for this structure? In this video, we'll show you exactly what offshore banks want to see. You will understand how the KYC process works, what documents are needed, and how to show where the money is coming from, and what banks look for when deciding whether to work with your structure or not. We will also explain which type of banks are easier to deal with and what steps can help you avoid delays. If you're planning international banking for your Dubai structure for foundation or trust, this is what you need to know, explained simply and step by step. Before we start, my name is Shiraz Baid and I'm the founder at Lepidus Wealth, where we help clients and families protect their assets using a range of tools including trust, foundations, wills, and offshore structures. So, if you own a business or real estate, don't wait until a legal or health crisis to start thinking about protecting what you have built. Instead, request your free and customized asset protection plan by clicking the link below. You can then implement it step by step as your journey progresses. Offshore banks want to understand three core things: the nature of the structure, the people behind it, and the source of funds. So, even if your Dubai trust is perfectly legal and properly registered, you still need to demonstrate real substance. And the substance is not just about paperwork, it's about presenting a story that makes economic sense and align with your global best practices. In practical terms, that usually means providing a full set of formation documents. This includes the trust deed or foundation charter, proof of registration with DIFC or ADGM, and in some cases, a legal opinion confirming the structure is valid under the local law. If your foundation has issued a license or has regulatory oversight, that helps too. Some banks may also request meeting minutes, resolutions, or internal governance policies that demonstrates the foundation's operational legitimacy. Occasionally, a notarized organizational chart can make a strong difference during initial reviews. Next, there is the question of who controls the structure. Offshore banks will typically ask for identification documents of the founders, all the council members or trustees, the ultimate beneficial owner if that's different, and any authorized signatories. That means passports, proof of address, CVs, and in some cases, even live video verification. Some institutions will go further and require professional references or background checks via third party verification services. In rare cases, they might request declaration of wealth or independent KYC certificates to satisfy internal compliance thresholds. But the most challenging part for many is the source of funds. Banks want to see a clear and credible paper trail showing where the initial capital came from. If it's personal wealth, that could mean audited financial statements, tax returns, or an exit document from a business sale. If the funds are coming from another company, be prepared to submit full corporate documents and financials. In some cases, they may also ask for transactional histories, evidence of retained earnings, or third party confirmation from auditors. Any mismatch between declared source and observed transactions can delay the process substantially. You will also need to explain the purpose of the structure. Is it for asset protection, succession planning, or a family office setup? The more legitimate and transparent your rationale, the better your chances. Some banks even ask for short business plan or wealth planning memo that outlines the expected flow of funds. If your plan includes investments, philanthropic activity, or intergenerational wealth transfer, it helps to outline these in a comprehensive strategy. Ideally, your narrative should reflect consistency between the founder's background, the structure's objectives, and the anticipated financial flow. Now, here is something important. Not all offshore banks treat Dubai Trust the same way. Banks in Switzerland, Liechtenstein, or Luxembourg tend to have more experience with foundations and can be easier to work with. On the other hand, some Caribbean or Eastern European banks may hesitate or ask for extra layers of due diligence. Having a pre established relationship with these institutions can often speed up things, especially when introduced through regulated advisors. In some cases, specific banks have internal teams trained to deal with the Middle Eastern structures, which can streamline document reviews. Language and documentation standards matter as well. If your documents are in Arabic or refer to unfamiliar legal concepts, be sure to include certified English translations. It's also a good idea to have a cover letter from your legal advisor explaining the structure in international terms. Some clients even prepare a visual ownership chart to simplify the explanation and avoid delays due to misunderstandings. In more complex cases, a short executive summary written in a banking language that can explain beneficiaries, flow of funds, and intended jurisdiction can be helpful. Another factor is risk classification. Dubai is generally seen as a compliant and low risk jurisdiction by global standards. But if you or any party involved is from a high risk country, the scrutiny will increase. Politically exposed persons or PEP, as well as sanctioned jurisdictions, will likely trigger additional questions or outright rejections. In such cases, enhanced due diligence procedures may include interviews, additional affidavits, or a closer examination of transaction history. For dual nationals or expatriates, clarifying tax residency and providing FATCA or CRS declarations may also be required. It's also worth noting that banks are especially cautious with discretionary trust or foundations with corporate clearing. If your structure includes underlying companies, nominee arrangements, or multiple tier ownership, be ready to explain the full chain with supporting documents. The more transparent and logically structured your entities are, the higher your chances of success. If you have set up multiple SPVs or cross border holding companies, each layer must have a clear purpose and be documented thoroughly. Timelines also vary. While the foundation itself may be set up in a week, the bank accounts can take several weeks or even months to finalize, especially if the KYC process uncovers any gaps. It's essential to be patient and have all the documents prepared in advance. Being proactive with your legal and advisory team can help you navigate these timelines more effectively. Some banks offer express onboarding options, but only for clients who meet very high standards of documentation and clarity. Finally, the relationship matters. Offshore banks are more likely to open accounts for clients introduced by trusted intermediaries. If your setup is being handled by a regulated corporate service provider with a strong track record that can significantly reduce friction, the credibility of your introducer often influences the speed and smoothness of the account's onboarding. It's not just who you are, it's who is speaking on your behalf that often makes the difference. So the KYC process may feel intrusive at times. It's ultimately there to ensure your structure is taken seriously by international institutions. And with the right preparation, opening a bank account for your Dubai Trust or foundation can be entirely achievable. It's a matter of clarity, credibility, and consistency. And with proper guidance, all three can be built into your structure from day one. As I mentioned earlier, if you own a business or real estate, don't wait for legal or health crisis to start thinking about protecting your wealth. Many people think asset protection is only for ultra wealthy. But the reality is that some of these solutions cost as much as setting up a free zone company in Dubai. If you want to secure what you have built and ensure your legacy, you can request your free and customized asset protection plan by clicking the link in the description below. And if you're serious about building long-term financial security, you should really check out my next video right here.